What's up, guys? How's it going? Welcome back to Investing with Paco. Today I'll be doing a quick little recap regarding today's Federal Reserve monetary policy meeting. As you know, a couple hours ago, Jerome Powell came out and spoke to the public revolving some issues that needed to be taken care of, and also we'll be going over the SPY chart and also Bitcoin pricing to see what happened during the meeting and after the meeting. And also, we'll be talking about what you should be doing during these dips. Should you be selling? Should you be buying? All that and more in this video. But before we get this video started, please consider hitting the subscribe button and the like button. I upload videos just like this almost every single day involving the financial market, cryptocurrency market. So if you want to be more educated in finance and anything that revolves making money, subscribe to the channel and join the family. And with that being said, let's get this video started. So around 2 p.m., Jerome Powell came out and spoke to the public. I know a lot of us were probably at work like I was, but I did manage and was able to hear the speech. And I'm not really going to go over and read this word for word. I'm just going to kind of do my own summary of what I understood from the meeting. So coming up right before the meeting, there was a lot of uncertainty in the market, especially today's meeting. A lot of people were expecting for Jerome Powell to go ahead and raise rates right off the back and to maybe finish tapering today. So that's why we're kind of seeing a lot of fear, uncertainty now in the market right before this meeting. That's why this meeting was super important for the market. So it all started up pretty good. They haven't finished tapering. They said that they're going to finish tapering until March, meaning they still have another month left over to finish up the tapering. So that means another $30 billion worth of bond purchases back, stimulating more of the economy. And also they said that they weren't going to raise interest rates until March. So that part was all good and fine. The market was actually responding pretty good. Even Bitcoin was responding really good. It was going towards 38,000. It set a lot of FOMO, I'm pretty sure, in a lot of people, because I know I saw my phone and I started seeing cryptocurrencies, especially like Bitcoin or Ethereum, starting going higher and higher. Like I saw Ethereum right at like 2700. I was like, damn, this is so far so good. But I held my emotions. I'm like, no, I'm not going in. I had a plan and I stuck to my plan. I'm glad I did stick to my plan, because that was pretty much the best part of his speech so far. Because after that, it just ended up getting worse and worse and worse, which in turn tanked the market and cryptocurrency market. So what happened was he got asked several questions. More importantly, they asked him about what he thinks about inflation compared to the last time they met up and talked about the monetary policies, which was, I believe, in December. And Jerome Powell said that inflation actually is getting slightly worse since December. That's an automatically bad news for the crypto, well, not even cryptocurrency market, but for the whole broad market out there. As we know, before December and all that, Jerome Powell said, "Oh, inflation is just transitory. You know, it will come down soon." It was transitory. But today he did not use that word transitory. He acknowledged that inflation is there and that it is getting worse. And to make it even worse, he even stated that he doesn't see the supply chain issues going away anytime soon. Well, not at least until next year. He still expects for these supply chain issues to remain intact all this year. So that in turn is going to raise up even more inflation. So that's also another bad indication to the market, still having those supply chain issues. And then another question, another issue that was talked about was the inflation, what I'm trying to say, the interest rate hikes will be in March. But he did say that if it comes to having to raise it up even higher, meaning going from a 0.25 to a 0.5, like if they had to do it, they will eventually end up doing it, which in turn spooked up the market even more, which we already knew that they were going to stop tapering in March and start doing interest rate hikes starting in March, but to come out and say that maybe not having, they're going to end up pumping it up to like a 0.5 interest rate just in case they have to. It all depends down to what happens from here on then. And then another issue revolving was the balance sheet, the balance sheets, which was when do they expect to reduce its balance sheets? As we know, they have, I believe, over $9 trillion worth of bonds that they purchased to stimulate the economy. They kind of didn't mention anything about that. He kept trying to like push it towards like the next meeting. So we're not gonna get any information regarding reducing its balance sheets, which, like I said, it's over $9 trillion. We're not gonna get any talk about reducing it until like 2 meetings from here now. So imagine this after May. We will then see what they're gonna do with reducing its balance sheets, because that's another important issue. So what you need to kind of keep in mind is Jerome Powell doesn't really care about the stock market. Obviously, doesn't care about the cryptocurrency market either. All the Federal Reserve cares about is inflation and also employment. So far, unemployment has been going down, which is a good sign. But what they need to get under control is inflation. As we know, it's over 7%. And after what was said today, we expect that next month's CPI data, which will be in February, will end up becoming even more. So that's just a scary sign. I'm not sure if that what was said today about it being worse is already priced in the market. But regardless, when CPI data gets released, we kind of already know that inflation is going to end up becoming worse. Because as we know, last month inflation data, well, actually this month inflation data was from December, and if he says that from that meeting before, inflation got even worse, so that means CPI data for February, which will be for January, will end up being more than 7%. So that's a super scary sign, and another sell-off here from them. So what does this mean for you investing in the market, investing in the stock market or the cryptocurrency market? Well, it all depends on you. Obviously, I can't advise you what you can buy, what you can sell, because I'm not a financial advisor. But all it comes down is to you. Are you a long-term holder? Are you more of a trader? Are you more like a swing trader? It all depends what you're trying to do, long-term, short-term. Obviously, if you're in the long haul and let's say you don't need your money from here like 10 to 20 years, it doesn't really matter what's going to happen in the market. You're in it for the long run. You just got to keep dollar cost averaging in and just keep trying to buy the dips the more you can. Obviously, you can't probably buy all the dips because obviously there's not unlimited supply of money that you can use. But if you're more of like a trader, a swing trader, what you really need to stay focused is on the trends. Trends will be your best friend pretty much, especially on these markets right now. If you see a downtrend, that's probably going to be the best scenario to buy puts. It just depends how you're playing your strategies and trading, but the trends is your best friend. Don't follow momentum, because at least for now we haven't seen really any momentum right now. And as we know, this time last year is when we had all that momentum and lots of stocks like AMC, GME, and plus many other stocks. But to this day, today, we haven't seen that momentum come back just yet. So that's kind of recap on that. But before we end the video, let's go ahead and jump onto WEBULL and check out the SPY. Oh, why does it look like that? Hold on. Bring it a little taller. There we go. So we have the SPY. We have it on the 1 hour chart. And as we can see here, this candle right here is right at 230, which was once the meeting started. We can see that we kind of rallied up a little bit. And as soon as Jerome Powell starts speaking and we start getting more bad news, which was said in the meeting, we started selling off. So we went all the way from what, a high of 444 all the way down to 433 on the SPY. And like I said, if you're a trader, this is super important. Right now I have the 13 EMA, which is this blue line, and then I have the 48 EMA, which is this red line, and I have this yellow line, which is the 200 EMA. And what you need to see is right now we are on a downtrend on the S&P 500. You could clearly see right here it's a downtrend, but easier for you to see is if the graph is underneath the 200 EMA, it signifies we're in that downtrend, which we are currently. And well, so far in the 1 hour chart at least, it's not looking pretty good. But all depends on what time frame you are looking at, because in the day chart we are okay. Well, the day chart, I don't know, it got even worse, because on the day chart the candle actually broke underneath the 200 EMA, which signifies a bearish trend. So just keep that in mind if you are a trader. But now let's go into Bitcoin BTC. All right, we are on Bitcoin and we are on the 1 hour chart. And as you can see, let me scroll down to, which was 1430. Yeah, right here. Like around this area when we had that meeting, we saw it rally all the way up to, I believe it was, yeah, around 38, was about 38,500, 38,600 on BTC. And as soon as Jerome Powell started speaking, we saw a sell off. And look at this, super important, it reached to its support line I have drawn here of 35.5. So obviously TA actually works. And if you are a long-term investor, it's just holding. Obviously these dips doesn't really mean anything to you, but if you are like into the day trading aspect, swing trader aspect, and you're trying to learn more into trading, should definitely understand support, resistance lines, and also try to use like this 1348 crossover method. I'm starting to learn this from Review Dork, so thanks to him I'm starting to understand this more. And as you can see here, we got a crossover, which was the 13 EMA crossed over the 48 EMA, which indicated a bullish sign, and it actually went up. So like I said, all depends how you're playing these markets. If you're on a long haul, just keep buying the dip. If you're a day trader, just understand the trends, and just go day by day. But yeah, guys, I guess that's it for today's video. Hopefully it's not too long. Hopefully you stayed all to the end. If you did watch all the way to the end, comment down below that you watched the whole video. So yeah, guys, I hope you enjoy, and we'll see you all next time. Peace.